We're just seconds now away from the new PCE inflation data, personal income and spending numbers, and durable goods orders. Take a look at the futures right now. We are in the green, Dow up about 54 points. You're looking at NASDAQ up about 50 points as well. The S&P 500 up about 7.5 points. Take a look real quick at the 10-year note because I want to get to Rick Santelli, but the 10-year now at 3.783, the 2-year at 4.489. And Rick is in Chicago at the CME. The numbers, sir.
Yeah, we are expecting a litany, a long list of numbers. So viewers, listeners on the radio, you want to be very patient here because all of these numbers, durables and income numbers, can be market moving. Durable good orders, April preliminary, up 1.1%. We're expecting down 1%. And last month revised from 3.2 to up 2.8, still solid. Take out transportation. We could see where all the gains came from. Now it drops down 0.2. And if you look at capital good orders, non-defense ex-aircraft, a proxy for capital spending, it is up a whopping 1.4%, much stronger than we are looking for. And in the rearview mirror, we have minus 1.1. That 1.4 is significant. It's the best level since the end of 21. And if we look at shipments versus orders, shipments were up a strong 0.5%, reversing their negative trends as well. Personal income and spending for April expected up 0.4 on income. It delivered the goods up 0.4, exactly as expected. Spending better than expected, up 0.8. We're expecting up 0.5. That's the best number since it was up 0.2 at the beginning of the year in January. And if we look at real spending accounting for inflation, it's up 0.5%, a very solid gain following an unchanged. And deflator month over month, up 0.4%, not good. That's 1/10 hotter than expected. It's much hotter than the 1/10 in the rearview mirror. It's the hottest level since it was up 0.6 in January. The high water mark there was up 1% in June of 22. Now, if we look at year-over-year deflator, up 4.4%, you can see yields moving up on that, can't you? Yes, up 4.4%, following up 4.2. That's the highest level since February when it was up 5.1, but a significant drop from its high water mark in June, which was up 7%. Now, if we look at the month-over-month core deflator, it is up 0.4%. Also hotter than the 0.3 expected. And we have to go back to January where it was up 0.56, rounded up to 0.6. The high water mark in June up 0.63, of course. And if we look at the deflator year over year, it is up 4.7, another hot one. We're expecting it up 4.6, and the rearview mirror is up 4.6. Real quickly, wholesale inventories dropped by 0.2%. We're expecting unchanged. Retail inventories were up by 0.2, exactly as expected. And finally, we're starting to see that build a bit. And last, and certainly not least, advanced trade balance, which, of course, is a deficit worse than expected. Minus $96 billion. We're expecting minus 85. We have made some progress, and last month's now stands at minus 82, but we are backtracking once again, getting close to triple digits. You can clearly see we're up at 381. We were at 377, and the 2-year note yield is up on the session as well. But I do caution that 10s, 20s, and 30s are still lower in yield, higher in price than they were yesterday, and there could be a whole lot of curve implications when we restock all of the money that we've been trying to conserve. If the debt ceiling issue gets resolved, there's going to be issuance. Many think $1 trillion more of T-bills is going to happen rather quickly. Others say we have to build up those treasury coffers, look for the entire yield curve to be packed up. My own feeling is watch for those bills to show up very quickly. Let's see how that figures in to all the action that we have seen, as we have seen bill yields rise up to historic highs. Will that reverse? Will 2-year notes drop? Will the curve steepen? These are all big trades, Andrew. Back to you, and I hope you have a good holiday weekend.